Gold and Bitcoin are both reaching a pivotal moment in markets, says our next guest, Markus Thielen, CEO of 10x Research. We'll be going over Markus's outlook for Bitcoin short-term and medium-term, what Trump's policies and executive orders may mean for the crypto markets. The implementation of a Bitcoin strategic reserve isn't confirmed yet. Well, there are clues. And could other cryptos join this strategic reserve? Tokenization from BlackRock. What does this mean for investors and markets? We'll find out. Markus, good to have you back. Welcome back to the show.
Yeah, thanks for having me. Great to be here.
Let's just start right with your research. 122K, I believe, is your short-term target for Bitcoin. When and how do we get there?
So there are a few instances how we get there. But I think, first of all, when you look back over the last 12 months, we have been moving in 16 or 18,000 increments. So the fact is that we're sort of like struggling around this, 90,000 to 106,000. This is a $16,000 range. So the next $16,000 range is going to be 122,000. How are we going to get there? Historically, actually, the Chinese New Year is going to be next year. And historically, there's a super strong seasonality where 10 days before until 10 days after, Bitcoin has rallied in sort of like 12 out of 13 years, going back to 2013. And of course, the fact is that the Chinese have been massive buyers and massive traders of Bitcoin, I think is a key factor here. When you look back in 2014, early 2014, actually 90% of all the Bitcoin trading was in China. So the Chinese New Year that we're going to have next year might be a big catalyst. But of course, there's a big catalyst, with the Trump election, with the Trump inauguration, and his first policy executive orders as well.
It's interesting how you've noted in your research report, and we can pull up a chart, how Bitcoin has moved in 16,000 increments. How did you first discover this?
Well, we look at a lot of kind of seasonality. We run, through kind of like the data. But it was mainly through the book I've written, where I look really deeply what has happened in each bull market. And of course, what a lot of people kind of sort of like miss is, what is really the demand? Why is Bitcoin really going up? Everybody tends to focus on the supply. Everybody, quotes the mining halving that we usually see every 4 years, but not many people really look at what's really driving the demand. And here, of course, was key factors in 2013 when China really discovered Bitcoin, and we had like a 5,000% return that year, and it was really because of China. It was people were sending money around with Bitcoin. Baidu, the Chinese internet company, was accepting Bitcoin for some payment services, but it was primarily actually a CCTV, so a state TV documentary of 25 minutes that really glorified Bitcoin as a new form of money. And they actually said, a way to evade taxes, really. And of course, for the Chinese, this was a great way. People were mining Bitcoin in China, paying for electricity, in the local currency, in the RMB. They were buying mining equipment in RMB. But of course, what could they do? They could sell then those Bitcoin into US dollars and bring money outside the country. And that was a big story in 2013. And ever since around the Chinese New Year, Bitcoin actually has done really well. We showed this analysis 2 years ago. It worked perfectly. We had like a 23% return. We showed it last year. It was a 26% return. And, we're hopeful that we get the good return this year as well.
Are you suggesting that after Chinese New Year, which is in a couple of weeks from now, the Bitcoin price will top?
No, we're not suggesting it will top. I think it's going to go, it's going to grind higher. I think we have some on-chain data that kind of projects the Bitcoin price to reach at least 130 to 190,000, and there were different on-chain data points that we're looking at. And I think we kind of like basing our analysis around that. But I think we also is starting to assume that actually this 4-year cycle that we're seeing, where 3 up years are followed by 1 down year, might actually stop working per se, because with Wall Street we're already seeing there's a lot less volatility in the Bitcoin market. We don't see these wide swings to the downside anymore. We're seeing 10, 20, 30 maybe percent corrections, but then there's a big buyer coming in, and I think that's what we've seen over the last year. Of course it depends a little bit on monetary policy, but we do think that the market is just going to grind higher because more and more money comes in. And when you look back, Bitcoin was up 150% last year. It was up 150% the year before. So everybody who bought Bitcoin, everybody who listened to BlackRock's Larry Fink to allocate to Bitcoin last year looks pretty good now. And I think they have bigger mandates to put even more money into Bitcoin. And what we're seeing actually since the Trump inauguration and even since Trump's election, that more US money is coming into the market. And I think there's a lot of money there available to really drive the price up further.
If you take a look at my my screen now, Marcus, I'll show you the CME Fed Watch Tool projections for how many rate cuts we're likely to get this year. By January, no rate cut is expected. This meeting is this week coming up, or next week rather. March, no rate cut expected. It isn't until June that we get a significant probability of a 25 basis point rate cut. Marcus, how do you feel about global liquidity conditions and monetary easing and the prospect of a hawkish Federal Reserve, which may dampen liquidity, which would be a headwind for Bitcoin and risk assets?
Yeah, I think that's a key risk and probably the most important factor that maybe a lot of people are really not aware of, because last year when you look back into March, also the Fed was expected to cut, but in the March FOMC meeting, Powell actually sort of stepped away to clarify when there's going to be the first rate cut. So this uncertainty really caused this kind of 6-7 months sideways consolidation, and it was only until the September meeting when the Fed did the emergency cut of 50 basis points that suddenly Bitcoin started to rally again. And I think when we came into December last year, also the Fed turned hawkish, and since then Bitcoin has sort of like moved sideways, hasn't really done too much. But the key factor is actually when you look at the market internals. So when you, for example, look at stablecoin issuance, when you look at a Bitcoin ETF buying, they sort of all stopped, since then. And it was really where we have like a massive ramp up in those flows, but then they suddenly stopped. But what has happened since the January released CPI data from December, when that came out, actually inflows have started to start it again. So we had like 5 consecutive days now of Bitcoin ETF buying, and before it was sort of like more an uncertainty. But I think this is because Fed Governor Christopher Waller, he came out after the inline CPI data that actually the core CPI, looks better. They might still cut rates, this year. Even he indicated that March could be a cut, even with a slight probability. But I think when he made those comments, actually the market and the ETF buyers took this as a vote of confidence. So actually these flows started to resume. So I would think actually that, yes, I was quite, worried about that this might sort of like derail or put us in a long trading range. But what we're starting to see is actually that the market took those comments from Fed Governor Christopher Waller as, he was pushed in front of the TV cameras to be a little bit more dovish. And so I think the market actually started to look through the Fed hawkishness. Even the Fed might be on hold up until, as you showed in your chart, until June or maybe longer. So it really depends. Because the Fed turned hawkish based on expectations of Trump's policies, there might be inflationary, even there isn't really much evidence, right? We were told this by economists already, in 2016 when he was, elected, and there wasn't really much inflation. Then coming the next year, S&P actually had one of the lowest volatility years, in its history. So we're not too concerned, but of course the market wants more uncertainty from the Fed.
This is I'm going to show a few correlations here. This one first. This is Bitcoin overlaid with the U.S. 10-year, and just over the last year, there has been a somewhat of a relationship as both have moved in tandem. Is this in line with your expectations and your understanding of how Bitcoin reacts to other asset classes? Yeah,
that's actually quite an interesting relationship, because historically, companies used sort of like the 10-year Treasury yield as the cost of money. But these days, who is all borrowing the money? It's most of the tech companies, but they have really strong cash flow and free cash flow really that they can use. So they don't really need to tap the capital markets and being punished really by this higher Treasury yield. I do think there is some correlation, but I think the interesting point here is really similar to the US dollar. Over the last year at least, the Bitcoin price is following more or less the US dollar. So the higher the US dollar goes, Bitcoin tends to go. And I think this is a sign that actually more money comes into the US, and some of this money will trickle down into really the Bitcoin price. So actually a stronger US dollar this time is more positive. What is a little bit negative is actually that the global liquidity, as measured, for example, by money supply from 28 global central banks, is denominated in US dollars. So if the Japanese central bank or the European central bank pumps in more money, but that money is, of course, partly offset by their weaker currencies, it's not really that powerful. So, but an argument that we made, a lot of our people have made the argument that Bitcoin follows global liquidity, which is, of course, intuitive to everybody. But what's a little bit counterintuitive is actually that money flow and Bitcoin, they don't have a normal regression, a linear regression. Rather, they have a power regression. That means actually that we have reached a level where, for example, we are at 105 trillion US dollars in global liquidity. But if liquidity has reached more than 90 trillion, this is just as you're showing the chart for the US.
Yes.
Globally, it's 105 trillion. But when money supply has reached actually 90 trillion dollars, there's actually not much difference what you can predict in the Bitcoin price. So the Bitcoin price can literally swing from anywhere from 30,000 to infinity because there's just too much liquidity in the market, and that trigger was around 90 trillion based on our power regression analysis.
Okay. Interestingly, this is well, you brought up global liquidity. So here I have the M2 money supply in the US overlaid with the Bitcoin price, and you can see a broad correlation as liquidity rises, we have higher Bitcoin price. It doesn't explain the big drops though, right? Because, after 2021, for example, the last bull market, we had a more than 50% drop in the price of Bitcoin, as you know, while the M2 money supply didn't really retract or retrace until later in the year. So somewhat of a correlation, but also a little bit of a lag. Is that a coincidence, or is that tracking this decline in liquidity?
So it is tracking, depending how you look at it. I think the way to look at it is actually at the year-on-year change of money supply.
Yes.
That's usually like a better trigger. But I think we can go back in history, and actually we are currently in the fifth Bitcoin bull market, and we can actually look back, how these other bull markets peaked out, and the 2021 bull market was actually peaking out in November, and it was because people were expecting that by December the Fed would change their view on quantitative easing into quantitative tightening. They were expecting that the Fed would start hiking interest rates from the zero bound. So we already see that the 2021 bull market in Bitcoin peaked out when the Fed started to become more hawkish, and I think that was kind of like a key trigger and a key sign. And when you look back, actually, a lot of economists from Wall Street were expecting that 2023 would be a big recession in the US. We just came out of CPI, hovering around like 8%, and people were expecting, inflation to be permanently high. We were quite bullish because we have an inflation model, and that inflation model predicted that inflation would fall to 3%, where it sort of did. And that made us kind of, quite bullish because we expected the Fed to be more on the dovish side going into that, and I think that happened. But of course, with the Fed turning hawkish, it's sort of like it's a little bad taste in the market right now. But again, as I said, I think the market will start to look through it because of comments from Christopher Waller after the last CPI meeting. CPI data.
So to sum up, then, what is your expectation for Fed monetary policy and how that's going to impact the crypto space?
So I do think Fed policy will be actually on hold probably for, at least after the summer. I don't think they're going to do much. It's just a matter of how Powell is communicating this. Again, the Fed governors, they were quite hawkish in December, but I think we're going to, see already some, I guess, less hawkish comments. I think end of this month, end of January, they will still remain a little bit hawkish, but I think the market will start to look through it a little bit, unless really there is really severe inflation voice in the market. We have already seen that, some of these tariffs that Trump threatened to be put in place once he is, inaugurated, they have not been implemented yet, so he has been holding off. They have been, cut down actually a little bit. So it's all negotiation tactics. So we are not too worried on the inflation side. We think the Fed will be on hold probably until September, and I think then they're going to resume their cuts because I don't think there's going to be too much inflation in the system.
Even with tariffs, you don't think that's going to be a factor?
No, I don't think tariffs is going to be, a big factor. I think the way to look at it is that, we have several economies around the world that are actually relatively weak. We have the Chinese economy weak, we have the Japanese economy weak, we have the German economy weak. Yeah. So I don't think there is actually a lot of global pressure. Oil prices, I think, have rallied now a little bit because of, the strategic oil reserve is going to be refilled. That was like another promise. Mm-hmm. But overall, I think the year-on-year change in inflation will be actually quite low. but it will take several months, if not quarters, for the Fed to acknowledge it, because they don't want to like flip flop again. Because I mean, they have flip flopped so often, and they just again they have turned hawkish in December.
Some people refer to Bitcoin as a store of value. One of the fundamental aspects of any store of value is its ability to hedge against inflation. Do you consider Bitcoin then an inflation hedge?
Well, I consider Bitcoin, as a store of value, and I think when you look back, it has actually kept its purchasing power. It's quite interesting because Bitcoin wasn't really started as a store of value. Yes, gold was mentioned a little bit, but they're not the primary viewpoint. The primary viewpoint was that people can actually use Bitcoin as a form of money, as a peer-to-peer, monetary system, basically. But what has happened in 2017, the developers and then implemented by the miners actually decided that the block size is going to be kept relatively small. So Bitcoin can capture around 2,000 transactions in each block. Though each block it takes every 10 minutes. This is of course too slow or too small really to be like a monetary currency. So Bitcoin is not a currency, but it is a store of value, and that was sort of decided in 2017. So I do think there is some value in it, and I think people looking for alternative assets. And I think the global pool of capital, every day somebody goes to work, every day somebody saves money in their account. And this kind of, wave of money just needs to find a home. And I think people are sort of like maxed out in some technology stocks, and there are not many gross operating businesses. So Bitcoin is a gross operating business with a network effect that keeps on growing. And I think we might actually capture this 8% hurdle adoption that has been very key for other technologies this year.
I'd like to show you one more chart, please. So this one is the Bitcoin price chart. And since we're talking about gold, I'd like to overlay this with the price of gold. Also another, what's considered a safe haven or a store of value by some investors over the last couple of years. Interestingly, there's been a correlation between Bitcoin and gold. Now, correlation doesn't mean causation. One could follow the other, or they could both be following something else. But the bottom line is, do you expect this correlation or relationship to hold going forward?
Yes, definitely. I think both are going to rise. I mean, the main reason why gold has been, of course, going up is, of course, the strong money supply that we have seen during, the COVID pandemic. But we have also seen, of course, massively strong buying from China to diversify its FX reserves. And the third factor, which maybe is actually more important, although for everybody who is looking at Bitcoin, is that the Basel III committee, which sort of oversees all the central banks globally, decided I think in 2019 or 2021, that Bitcoin can be a zero risk assets on central banks' balance sheet. So before some assets have haircuts, stocks have haircuts, whatever they want to put on the balance sheet. But what's safe is of course cash and, for example, Treasury bonds. And gold has also a zero risk weighting now, so it's being fully accounted on central banks' balance sheet as full value. And I think with Bitcoin, we're seeing more and more adoption really from institutions. We have some contact also from the sovereign wealth funds. So we're seeing more and more people diversifying into it. And I think, because we're having some stress in some economies, as I was saying, earlier already, the Chinese tended to use Bitcoin, 2013 to bring money outside the country. And this is a trend that has continued. I personally think around probably 30% of all the Bitcoin that have ever been mined were mined in China, because the Chinese have been really dominating the mining industry. And of course, with the introduction of stable coins really that have been also with us since 2013, 2014, but they really only took off in 2020. And since then became a store of value by themselves. The Chinese, for example, using a lot of the money to put in stable coins. But there's also been a lot of money buying by Chinese. And when you look at the demand from central banks for gold, it's actually from the PBOC. It's not really from another central bank. And we think actually there's a lot of demand from Chinese individuals really buying. So we think this is just a global trend for people in countries where the currencies are sort of blowing up or weakening. And the Chinese currency is at the weakest level since 2007. So we're seeing this weakness, and people kind of want to store their value there. And that's why we're seeing the money inflow into gold and into Bitcoin.
Just to clarify, the Chinese weren't going into Bitcoin, were they? Because it's not legal to own Bitcoin in China?
It is. I think it is legal to own Bitcoin. Again, there have been big buyers. As I was saying, the Chinese state TV came out with a documentary in 2013 glorifying Bitcoin, but of course in early 14 they kind of reversed it and had like negative impacts. But there's some data that indicates that still around like 20% of all the Bitcoin mined currently are being mined in China. That of course is against the law there, but you can hold Bitcoin. It's just that you cannot or you shouldn't really transact in it. So the law is not clear. There have been like I think 17 times try to like outlaw it, but I think what you're seeing more and more in China is actually the buying of USDT, so on Tether, on Tone. That's kind of like a good indication where we see whether really the demand is coming from. So it's more stable coins and not necessarily Bitcoin, because stable coins also US dollar exposure.
Let's talk about some regulatory changes and how that's going to impact not just Bitcoin, but all cryptos. Let's talk about this new development. Senator Loomis from Wyoming to chair historic Senate panel on digital assets. The Senate Banking Subcommittee on Digital Assets in the 119th Congress will have the following two focus areas: passing bipartisan digital asset legislation that promotes responsible innovation and protects consumers, including market structure, stablecoins, and a strategic Bitcoin reserve. Conducting robust oversight over federal financial regulators to ensure those agencies are following the law, including by ensuring Operation Choke Point 2.0 never happens. So a few things are interesting to me in this particular document here. One is that they're recognizing that a strategic Bitcoin reserve is a serious matter, and it wasn't just talk from President Trump. And number two, they're acknowledging that Operation Choke Point 2.0 was indeed an actual initiative and not just a conspiracy theory. So let's talk about the first one first, and then Operation Choke Point 2.0. What do you make of this statement, and is this confirmation that we will actually get a Bitcoin strategic reserve? Keep in mind, a Bitcoin strategic reserve was not yet an executive order so far from Trump.
Yes, it's not an executive order yet, but Senator Loomis handed this proposal in July 31st last year. So it's been already sort of like 6-7 months in the process, and I think the market is looking for confirmation that this will happen, and there are different forms. Senator Loomis proposed that over 5 years the US government should buy 200,000 Bitcoins per year. So that would be 5% or 1 million Bitcoins. I personally think they're gonna probably first announce that the Bitcoin that the US government holds, which is around, worth around like $20 billion currently, which is actually relatively small from a bigger asset allocation perspective, but that the US government commits not to sell those Bitcoins. We had this, of course, from a state in Germany that was required by the law last year to sell their own Bitcoin. Now the price is almost like double. But I think the US will probably commit, and I think there's always, of course, a little bit pre-election talk and then post-election reality. But so far, there's no reason really to doubt that these policies will not be implemented. I think the crypto lobby was just too strong. We have seen, of course, Trump meeting with a lot of crypto executives, not only in Nashville at the Bitcoin conference, but throughout the year. And I think he is quite in favor of this view of a strategic Bitcoin reserve. And all they have to do is just not sell it. So I think it's just a matter of time until they announce it. And I think it's really like a clear cut that they will announce it. And of course, Senator Loomis is from Wyoming, and Wyoming is probably the most pro-crypto state in the US. Yes, it's relatively small, but they have a lot of neo banks there, there are a lot of crypto firms there. So I think that she chairs this panel really. I think that's really kind of really positive for the market.
All right. So once a Bitcoin strategic reserve actually is officially announced, we don't know when, but let's say it does, what happens to the price then? Keep in mind that this news has been out for a while. The expectation is there. Will there be any significant change to the price, you think?
I do think so. Yes, it's the news is out. There's not going to be a lot of surprises. But it legitimizes, again, Bitcoin. I think what we have seen really with the BlackRock ETF, it legitimized Bitcoin for a lot of asset managers. We have seen this already in 4 years ago, almost like 5 years ago now, when Paul Tudor Jones said Bitcoin is the fastest horse. It legitimized Bitcoin among the hedge fund community. And this will just be like another step. And this will be another point where, for example, like, nation states, and we have some from El Salvador to Bhutan, who have some exposure, but also, for example, the Swiss National Bank has exposure because they're holding, for example, MicroStrategy. So that's kind of like where they have exposure already to Bitcoin, and those central banks or those nation states actually might have then another reason. And I think we have to really understand that the US regulators are really the ones really driving regulation globally. So if they adopt a more positive stance, I think other regulators from the world can actually also follow it. So I think there can be actually a lot of demand coming after that.
So Operation Choke Point is actually a term that covers an initiative from the government, from the FDIC, and from the Department of Justice that encompasses not just cryptos, but the traditional banking sector as well for various reasons. So in regards to the crypto industry in particular, if we never were to have Operation Choke Point again, right, what does that mean for on-ramping, off-ramping? What does that mean for adoption?
Yeah, I mean, this is really, a huge thing that it seems to be, not really well, I think, understood outside of the crypto world because, Choke Point 2.0 was really dismantling the banks that were booking, transactions over the weekend, where, for example, I could send you money, on a Saturday, basically almost like off balance sheet, just between you and me, because we had like these, three banks, and the two banks. Two of those three banks that were dismantled were those banks that were transacting really over the weekend in large US dollars amount, and we're talking really about $800 billion per quarter. And this was really out of the sort of the Fed's reach. It's just sort of like just some bookkeeping on one end to another, and that made the on ramp actually super easy. I mean, I can from my own experience, some of the companies that I dealt with, it was easy to on ramp because you could suddenly send the money to the US entity and they could on ramp into crypto, but you don't have this anymore in size. And I think that's kind of like the biggest thing that was really when you had like Signature Bank in the US, Silvergate Bank, these were the two banks really that were dealing with all the crypto exchanges where people can just send money to the US in US dollars and on ramp. And I think these sort of like neo banks sort of like were dismantled. And I think that stopped a little bit the money flow. I think people really talk, about this cycle that not a lot of retail investors are in the market. When you look at Google Trends and search for the Bitcoin term, we are not at all-time highs. So some people argue that means the retail are not really back in the market. But I think it has to do really with on-ramp. So because when you make the on-ramp very easy, you bring a lot more people in. Of course, we saw this with Trump's meme coin, where apparently 400,000 crypto users entered the market that maybe have never had crypto before, but they got inspired by this fan token basically over the weekend. But I think this whole Choke Point 2.0 might actually set up the rails again so people can on-ramp, because I think what we are primarily seeing this cycle is that institutions are in the market. It's really the inflows through sizable stable coins that are really driving the flows and not necessarily retail flows. So Choke Point 2.0 revoked sort of means maybe more retail can actually enter the market.
Let me ask you, just from a sentiment perspective, is right now feeling a little bit like October 2021, right before everything topped and right before most altcoins collapsed, in the sense that the retail crowd is getting excited. We're starting to see FOMO buying coming in. Are there any similarities now and then?
So it's actually very different, because when you look back in history, how did Bitcoin bull markets peak? There were really two main factors. Either there was like a major cycle event, for example, like the Coinbase listing in April 2021. That was a peak event. It was, for example, the December 2017 Chicago CME Bitcoin futures being launched, where excitement was built. But the other factor was, all these events were usually accompanied by some regulatory issue or oversight. The 2017 bull market also peaked when the SEC sent more enforcement letters. The 2021 bull market, peaked also to some extent when there was more regulation in China. And in history, for example, in the 2013 bull market peaked when China enforcement agency really, started to go after people and told banks not to deal with crypto firms. So, when we kind of look at from a regulatory side, it seems like we are not peaking out, because there's some regulation or some enforcement action. That doesn't seem like, the trigger now. A Fed hawkishness I don't think it's like enough because there's not real inflation in the system for the Fed to meaningfully turn hawkish. It's more kind of they turn hawkish, but they're not going to do much. So it's not that we're coming from zero interest rates as we came in 2021. So those factors are like very, very different. And I don't think there is a lot of exuberance in the market. The fact is that we have more institutions in the market that look at Bitcoin as digital gold. So the narrative actually has evolved as a store of value, as you said earlier. So people will hold onto it and rather add on the down days, on the down moves. And I think that kind of like cushions the move lower. So I don't think we are anywhere near a peak.
Do you think that a Bitcoin strategic reserve will be followed by a general crypto reserve? And if so, what would that include?
That has been, of course, floated to put other currencies in it. People talk about XRP, people talk about Solana. We're seeing already, of course, that some entities, World Liberty, Financial, that they're buying, various assets, and who knows what they're going to be doing with it. I think the administration has realized and is realizing that crypto is not getting away. It's not going away. People are using it more and more. As I was saying earlier, we probably go above the 8% global adoption rate. So right now we have around like 700 million people using crypto, having crypto holdings. And that probably is going to go up because historically when we have any new technologies, even from the desktop computers to Uber drivers, to Netflix, to social media, when that goes above 8% adoption curve, it tends to accelerate. And of course, if the US sort of like collects more digital asset, that sort of like drives up the price and it legitimizes it for other investors. So I can imagine that they're going to put in some, for example, some XRP. I think that's why XRP Ripple has been going up a lot, because I think here there's of course the huge remittance market that is eyeing it, where Ripple might be used, and it's becoming like a transaction currency. But I think the interesting point is really that Trump is against a CBDC, a government-backed currency basically, and Scott Bessent is also against it as the Treasury Secretary. But it also means that if anybody wants to hold stablecoins, which they tend to be all backed or against the US dollar, that everybody who wants to hold those stablecoins, they need to first earn money, earn value in their own currency, and then convert it into sort of a US dollar form. And most of those US dollars in stablecoins backed assets are actually in treasuries, are actually in US backed assets. So it's actually really good for the US economy and the US government to really legitimize also the US dollar as the reserve currency going forward. And I think that's kind of like an interesting aspect where we have already, Tether as the largest issuer of stablecoins, being the number 6 holders, with China number 1, Japan number 2. So as the sixth largest holder of US Treasury. So we already see how the crypto market and those inflows are actually backing, the US credit rating, you can argue. There's a big demand from that.
So long term then, do you think that stable coins or collateralized stable coins in particular will be bearish for yields and bullish for bond treasuries in particular? If people need to buy more treasuries, by people I mean the people behind the stable coins, to collateralize these stable coins, isn't that going to push down yields?
Of course, it depends how large those flows are, but theoretically, that's of course something that's going to cap yields. I think we can probably also assume that the yield is probably going to stay here at this level simply when you add, the way to calculate yield is probably the fair value, is you add GDP plus the inflation rate. So GDP is around 3.1%. Plus the inflation rate is around 2.9%, you are at 6%. So now at Treasury yield at like 4.7. So, you're a little bit on the low side. You can actually argue that we might be a little bit higher. Maybe we're already seeing that the yield has been lower than expected because of this, demand for global assets. But I think the fact is with stable coins, it's so much easier to send money around. When we have subscribers from China, a lot of time their credit card doesn't work, the credit payment company doesn't accept it, but they can send easily stable coins. So we're seeing this from our business, how important it is. So, and I think there's going to be like, millions, if not billions of merchants almost in the world that really accept these stable coins. And I think you can actually go to in Southeast Asia to many money exchanges now And instead of getting the local currency, you can actually get USDT and send it around. So I do think there's actually a big part. It will become actually a much bigger part of the global financial system, because also Tether is working now with a US bank, where they're getting help of buying commercial bonds, where they're getting help of buying those treasuries. And of course, one of the key people from this bank is now part of the U.S. government. So I think it's sort of like it's all intermingled now. So it's getting closer to becoming, into the real financial system now.
Okay. And finally, we have here Larry Fink. You brought up BlackRock earlier. Larry Fink wants the SEC to rapidly approve the tokenization of stocks and bonds. What does this mean for investors? How does this going to impact the markets?
Well, it's going to mean that, it's again, I think crypto is part really of making everything more efficient. And, technology has been to take out the middleman. We have seen this, of course, with apps where you can buy properties. You're taking out the local property agent. And I think with everything, it's becoming, a lot smoother and a lot quicker. And I think with tokenized assets, you can actually trade them probably 24 hours. You can easily, book them. So the whole middle and back office, which probably is like 70% of all the banks, might be sort of like eliminated or might be reduced. We have seen this already, of course, with electronic trading, where Goldman used to have 600, equity traders, and now they only have like a handful, something like this. Might be also seen because of tokenization. And I think Larry Fink has been at the forefront of a lot of those technological changes in finance. So the fact is that he's really promoting it, is really like a big thing, because for, when you look at, for example, for some VC funds, you might buy it today and you have to hold it for 10 years. But if it's tokenized, you can actually, change ownership a lot quicker. Booking is a lot quicker. I think the key thing here is really that a lot of the trades are settled, in 1 or 2 or 3 days, the so-called T1, T+1, T+2, T+3. But if it's all tokenized, it can be almost settled instantaneously. So this, of course, frees up a lot of capital. This frees up a lot of risk capital that sits on, on those broker dealers' balance sheets, on banks' and balance sheets. And of course, when you look at if somebody has like a bad credit rating, you probably maybe be able to reevaluate people's holdings in real time. So if a company, there's usually like a government regulatory agency in the middle of all the clearinghouse to clear these trades. In the case that somebody blows up, as we have seen with LTCM. But if they're tokenized, you have the real-time value all the time, so you can identify this, and the risk in the system might actually be reduced over time.
Okay. Last question: have you done analysis on long-term or medium-term Bitcoin price forecasts?
Well, there are various, people talk about, various upside targets. Again, if you look at, what is the outsized market in gold in terms of financial assets, some say it's like, $10 trillion. Some believe it's like 15 trillion, but, including some other, off the book, gold holdings. But if you just assume it's like 10 trillion gold in financial assets or in store of value, versus Bitcoin is around 2 trillion. So you can say that the price can easily go up by 5x, so 500,000 based on the gold relationship. We look at more at on-chain data, which predicts somewhere between like 130 to 190,000, right now for this cycle. There's other models you can look at, but I would assume that we probably see a decent size up this year, driven by really the strategic Bitcoin reserve and more money coming in from the asset managers. And then we can look, later on if we really catch the gold target price, which again would bring Bitcoin to 500,000.
What would, in theory, prompt a massive outflow for Bitcoin? In other words, institutions and retail investors alike selling. I know we talked about the Fed tightening, but is there another scenario you see that could be the catalyst for the next bear market?
Well, it's interesting because, we also had 2017 an upgrade, which I was saying earlier already, where the block size was actually kept small. We had another upgrade 4 years later in 2021. So now if the pattern would hold true, we get like an upgrade, this year in 2021, which I think is a little bit early, but discussion has already started. There's going to be some meetings around, and maybe we get an upgrade next year. That upgrade might actually have more where Bitcoin have more some smart contract functionality. Maybe there is a bug, there could be a bug that's kind of like, worries people. There could also, any kind of like technological replacement where a better currency could come out. I personally don't think so, because we have been living with Bitcoin for the last, 15, 16 years almost. And so far, nothing has really replaced Bitcoin per se, right? We are at 57% dominance, so you can really see how Bitcoin is really dominating the whole market. I don't think there's anything on the regulatory side. I don't think there's really anything on the monetary side. It's just really like a matter of, who is the buyer, and is the buyer maxed out? And I do think there's more and more people coming into it, and just people want to hold a little bit. So I'm actually not too concerned that there's going to be a major sell-off.
Okay, thank you very much, Markus. Where can we follow your work?
Yeah, 10xresearch.co is our website. We write a lot of research. We have a lot of institutional clients, anybody from hedge funds to high net worth individuals to traders, asset managers, and we are growing increasingly. So we welcome new subscribers, of course.
All right, excellent. We'll put the link down below, so make sure to follow Markus and 10x Research there. Appreciate it. Speak again soon. And thank you for watching. Don't forget to like and subscribe.